Hey traders, welcome to this week's Forex Focus. I hope you're all doing well and you've all had a good week in the markets. For those of you that are joining us for the very first time, what we do in these shows is we look at the major currency pairs and we look at the key levels where the market potentially will provide us with trading opportunities. We'll talk about how you can trade those levels and what exactly you're expecting from those levels. But one of the things that you have to understand and appreciate is that this is not trading advice. So I'm literally just talking you through what it is that we're looking to do with our own portfolios and what you should be looking out for as well. What you will then go and do is you'll go away and you will take a look at that. You'll do your own analysis and decide whether or not it's right for your risk profile, for your portfolio, and then make your decisions accordingly. Okay, so with that being said, let's start off by taking a look at the Australian dollar. So the Australian dollar, the primary level that we're looking at is the same one that we were looking at last week, which is this one here at 0.6384. Now, we did get an initial reaction to this level last week. The market traded up into it and then it retraced, so it sold off from it and it went halfway towards our profit target. Our profit target generally is 1-to-1. We use the ATR to define our stop loss, so it's 2 times the ATR here. Which, as you can see, was around 40-ish, 45 pips there. The market got to that level, it then sold off by about 42 pips before retracing, and now it sort of is sat in and around the break-even area. So this is still the area that we would look to trade from if we weren't already in the trade. If you're not in the trade right now, what I would probably do is wait to see if the market can break the low here at 0.6334 and then get involved there. If the market were to break up above, then we need to take a look back to see what is the next potential significant level that the market could react to. And really that's going to be this guy over here you can see on the 4-hour chart, which is a 0.6441. But actually, if we go and put that in on the daily chart, so if we go down here, you can see that this tracks back much further than just the 15th of November last year. It also comes into play in and around the 14th of February 2024. And then if we go even further back, it comes into play on the 31st of May 2023. So quite a big level that if the market gets through this, then we can look to take a second opportunity if it gets up there. Now, remember that the way the markets are at the moment is that they're very much driven based on this sort of like this risk on, risk off dynamic. And the risk off dynamic is essentially whenever Trump opens his mouth to do with the trade wars and then the retaliations that follow on from that. So you have to appreciate that in the market condition right now, it is more challenging to be able to make money because even though you might be in an opportunity that looks fantastic, both technically and even if you're looking at it from a fundamental perspective, the markets aren't being driven by that at the moment. They're being driven very much by sentiment. So trades that ordinarily would work out very well could turn on you very, very quickly and stop you out for no particular reason other than, there's been a statement out of the White House or from one of the other regions of the world in retaliation to those statements. So they're the things that you have to be careful of, which is why I said that if you don't want that additional risk, then now is the time to kind of sit out of the market and really not do too much with it. Wait for a better opportunity. However, if you want to be involved in the markets, you can still make money, absolutely. You just have to appreciate that it's going to be a little bit more difficult. It's going to be more challenging and potentially you'll face greater drawdowns than you ordinarily potentially would do. Okay, so anyway, with that being said, that's what we're looking to do with the Australian dollar. Moving on to the next major, which is the pound, not the pound New Zealand, the pound dollar. As we can see here, what we're essentially looking to do here is buy the dips. It's the same as we were looking at last week. The market broke through this resistance area over here. If we zoom out a little bit, we can see that we were looking at the resistance area from the 13th of July 2023. The market here is broken out above that. Now we need to look to see where is it that we would initiate trading opportunities. Now there are going to be 2 areas. The first is the immediate one just down here, which you can see on the 4-hour chart, which is a 1.3201, which is a nice round number there. It's also previous recent resistance and previous recent support, which is great. However, if the market gets through there, and if you want to be a little bit more conservative, then you would wait for a reaction, or for at least the market to reach down to 1.3140 to initiate your buy opportunity. Now, for those of you that have been following me for a while, you know that I don't necessarily wait for confirmation. I identify the key levels that I want to trade from. And in this instance, it wouldn't be this first level over here. It would be the second level. If the market gets down there, then I take an immediate bounce from that level with a stop, which is 2 times the ATR from that level. The next opportunity, in fact, did I skip? Yeah, we skipped through the euro dollar. So we went straight from the Aussie to the pound, sorry. So the next one is the euro dollar. The euro dollar is very much the same sort of trade as we've got in the pound. So we've got a major level. If you look over here on the 24th of September, we've got a major level of resistance here at 1.1199. So one spot, let's call it 1.20. Okay, so a big level there that the market has reacted to, a number of times in the, not just the recent history, but also the long-term history as well. If you go back to 2021, it came into play. If you go back to 2020, it came into play the beginning of 2020, 2018. So it's a very, very big level that we're looking at here. Now, I think there is, as long as sentiment towards the US dollar, which it should do, remains negative, then you want to essentially look to buy any dips. Or buy into any euro weakness, or sell into dollar strength, if you like. But the dollar here obviously is the quote currency. So what we would be looking to do there is essentially every time the euro dollar dips a little bit, we're looking for buying opportunities. Okay. Now the area that I would look to buy from is here at 1.1201 if the market gets down that low. Unlike the pound dollar, I'm not looking to buy immediately from this area over here. This is only a temporary area of support for me. There isn't a bigger level there that comes into play that justifies me taking an immediate buy from that level. So I'm waiting for the market to get back to 1.1201, and that's where I'll look to initiate a buy opportunity. The next one is the New Zealand dollar. So in the New Zealand dollar, we were looking initially, we thought we might get a little bit of a reaction here. So we thought the market might sell off from this area over here. So you'll notice that with the euro dollar and the pound dollar, we were looking for buying opportunities. So to express our view on dollar weakness, the Aussie dollar, we were looking to sell the Aussie dollar. So the view there would be a little bit of dollar strength, although it's more sort of to do with Aussie weakness than it is dollar strength. Just going back to that over here. So you can see that the dynamics are very different from a charting perspective there. Now, if we go and take a look at the New Zealand dollar, we actually had the same idea last week, which was to sell into this. However, the market just absolutely blasted through that level and it hit our stop losses. So this was one that we took a loss on last week. Where do I think this is going to go right now? So looking at this chart right here, I think that it's kind of like becoming more and more clear that the whole market is going to be negative towards the US dollar, regardless of what the other constituent in that currency pair is going to be. So from that perspective, we do have some opportunities where we're looking for dollar strength in the Aussie dollar, but pretty much everything else, we're going to be looking to trade the other side of the coin. So with this one here with the New Zealand dollar, we're looking for the market to pull back towards this big level, which you can see was a very, very big level of support there on the 19th of April. Then again on the 29th of July, and it's got big reactions to this level here, even going as far back as September 23. The market broke through it in October, but then obviously it closed back above, which is a very, very strong sign there. So that's actually a very good trade opportunity in and of itself. But what we would be looking to do here is trade this short-term volatility. So as the market pulls back to this level, have a buy opportunity in there, or a buy trade and order in there rather, if I learn to speak English properly. To put a buy order in there, the ATR is going to be 34 pips. And so you're looking at roughly around a 70 pip stop loss for a 70 pip target, which if you take a look there, that basically puts your stop loss somewhere around there. Then the beauty of this way of trading is that the target you would hit that profit target before the market hits any of its recent highs. So the market doesn't have to do a lot for you to be able to make money, which is the way that we like to trade the markets. We don't want the markets to do anything extraordinary for us to be able to extract our profits. And that's how we're able to maintain such a high win rate. Now, moving on to the dollar CAD. So this one here, we're looking to sell into any rallies here. So as the market rallies up, we've got a big level of resistance here at the 1.41555. The market then, if we just go a little bit below, there is, for you more aggressive traders, another support level in over here, which you can see better on the 4-hour chart at the 1.4030. If the market rallies up into there, you're also well within your rights to take a sell trade. So either 1.4024 or 1.4156 are the levels that you want to keep an eye on going into next week's trading. The dollar franc is really on the floor at the moment. Again, what we're looking to do with this, looking to trade the major levels. We can't take any long-term views with these currency pairs. Otherwise, my long-term view actually at the beginning of the year was that we would see a lot of strength in this currency pair, which we started to get towards the beginning of the year. We got a nice big rally. And then when all of this stuff started to come in about the trade tariffs, and that's when you've seen that just the market has completely switched gears. And now you can see that it's absolutely getting sold into. So you've got a lot of franc strength here, which is it's kind of obvious that would happen because the Swiss franc is becoming the safe haven. I mean, it is a safe haven currency, but it's even more so because the US dollar has lost that mantle very, very recently. So from that perspective, what we're looking to do is any rallies in here. So if the market were, let's pull this level down a little bit. If the market were to rally up, we would look to become sellers in and around the 0.8403 area. So sell into any strength that we start to see into this pair, because even if the markets do start to recover, they don't move in one direction without sort of ebbing and flowing. And these are our opportunities there to get in and sell the markets. Okay. The final one is the dollar yen. So very similar dynamic to the dollar franc. We had this level in here last week at 146.45, which remains this week. So nothing is going to change this week. We still feel that this is a big level that we want to become sellers from. Okay, so if the market gets up towards 146.55, you have an immediate sell order in at that level with 2 times your ATR, which we would take in this instance off of the 4-hour chart. So which is 80 pips, so around 160 pip stop for 160 pip start target. If we look at that level there, that puts a stop loss in and around this area here, so around these highs, which isn't a problem. And then to the downside, you can see again, you manage to take your profits before the market gets anywhere near those lows there, which is a very, very good thing. That's again, like I said just now, that's one of the things that allows us to maintain such a high win rate, is that we don't expect anything extraordinary from the markets in order for us to be able to take our profits. Okay. So that wraps up this week's Forex Focus. I hope you've all had a wonderful weekend. Happy Easter, of course, to everybody. If you have any questions, please feel free to post it beneath the video. Otherwise, thank you so much for watching, and I will catch you in next week's Forex Focus. Take care now, and speak to you soon.